All right, good morning, everyone. It is 7:48 in the morning of August 19th, 2022, and this is my pre-market strategy session. So today, the title of the video is Inflation Reduction Act equals Hawkish Fed. With stimulus getting pumped into the economy, which this Inflation Reduction Act is, it's stimulus. That's going to make the Fed hawkish. So the Fed is most likely to continue to hike rates, at a 50 to 75 basis points over the next, I don't know, let's say 6 months. Putting us at somewhere around 3%, maybe 3.5% on the Fed fund rate. And so that's going to, be a negative for the markets. In addition to the economic situation that we're facing right now in the country, there's something here too, and that is that this is the SPY, which is a proxy for the S&P, and I've seen this trend line. I watch other YouTubers, I watch a little bit of CNBC, a little bit of Yahoo Finance, and I've seen this support and resistance line, this red line that you're seeing on your screen, so many times. Everybody's looking at this same support and resistance line, which is acting as resistance right now. And so it becomes a self-fulfilling prophecy, really. So here we are today. The sellers came in to sell the break of this resistance line, and yesterday it came up and almost tagged it, and the sellers came in. Or I'm sorry, not yesterday, but Tuesday. Oh wait, say Friday. Yeah, it's Friday. So let's see, Wednesday. Sellers came in and sold it just as it started to approach the support and resistance line here. And then yesterday, it just failed to get above the previous day's highs. Actually kind of broke down below for a short period of time. It broke down below Wednesday's, or I should say Tuesday's low here. And actually, let's see. It broke down below that. And here we are this morning, pre-market. There's a really thin yellow line. If you're watching on your phone, you can't see it. You can see the pre-market price over here on the right. And so it's off by about 1% this morning right now. The SPY is, about 0.95% to be precise. We go to the 10-minute chart and you can kind of see the pre-market a little bit better. So let's see, here's that break on the 16th. The days are starting to mesh together on Tuesday. So here it popped up above it and then sold off rather significantly there above that support resistance line. A lot of people are looking at the same chart. And so then here we go. Here's today's pre-market action, and we're off by about 1%. Now after, and actually there's a nice rhythm to the market here. We've gotten, a bottom, pullback, move back up, another pullback, a move back up, pullback, and now is this another pullback for the next move up? I don't know, but I do know that at least in the short term, the bearish is the correct direction. I'd say over the next 2 to 3 trading days, bearish will be the correct direction. After that, it's possible this thing really could start to fall apart. It just depends. There are a lot of things it depends on. Usually, earnings reports are usually the thing, for it to depend on. But who knows what the market's going to do? there's an enormous amount of bearish sentiment out there. Uh, everybody, I mean, from Michael Burry, who's the lead character, who's a real life lead character in the movie The Big Short, called the housing industry collapse. He capitalized on it. Peter Schiff, who's just always bearish, but I mean, name the bank, Bank of America, Merrill Lynch. Gosh, I mean, there. Who else is out there? I've forgotten the number of different. I've forgotten the names of all the different banks that are out there. Wall Street type banks that are like warning. Hey, look, global economic downturn. Imminent. So on and so on and so on. And the yield curve here's the 10-year minus the 2-year. And you know what? There are plenty of other parts of the yield curve. Actually, while I'm talking about it, let's go look at it. Where's my large caps and stuff? There it is. Let's go down to rates. And so let's see. The 1 year is still over the 3 month. The 2 year and the 1 year are barely so. The 1 year is yielding 3.26, and the 2 years yielding 3.27. The 5 year, so that hasn't inverted yet either. So the 5 year is still higher than the 2 year. It's the 5 year is higher than the 10 year though, and the 5 year is almost as high as the 30 year. The 30 year is beneath the 1 year, and the 30 year is beneath the 2 year. So there are other portions of the yield curve that are inverted, like the 1 year is over top of the 10 year, the 2 years over. Obviously, I cover that every day, and the 5 years over top of the 10 year, and the 3 month isn't far away from the 10 year. Back in 2020, let me go back. Let me go back here to the SPY. Back here in this time period, let's see, where was it? I think it was back. Well, it would probably be easier. Yeah, back here, like it was in September of 2019, I believe. Back in this time period, the 3 year was greater than the 30 year. That's if I remember that correctly. I'm pretty sure, or I'm sorry, not 3 year, the 3 month. The 3 month was greater than the 30 year, so everybody was running the safety. It was nuts. So here we are. This to me looks like if I were to kind of chart this, which I don't trade yields, I don't trade spreads. If I were to chart this, this is starting to look like a bull flag down here for the next leg down. So it looks to me like the yield curve is going to invert even more deeply than it's inverted now. So yeah, there's a lot of negativity out there on the market right now, which is usually what happens is Wall Street gives everybody a big FU and does the exact opposite of what the majority of traders are doing, which is called max pain. That's just what Wall Street does. I like to think of it as a way of I like to think of it as the stock market does its best job of paying off everyone who has their money in the market, but it's just really, really bad at it. Yeah, okay, so today's a day for pullback. The SPY is overbought here. You can see on the relative strength index here, the SPY is well into overbought territory. The Qs popped up over top of their trend line, its trend line. Interesting happenings here with the Qs. Actually, you know what? Let's do that. Let me go to the close. Well, that looks nice. Yeah. Anyway, yeah. So everything's kind of coming down here. Let's take a look at crypto real quick. Oh yeah, the dollar. Oof. Ooh. Strong dollar is not good for emerging markets and just about anybody else. Strong dollar is indicative of people going to cash, selling their positions, so on and so on. So yeah, crypto. Let's check out crypto here real quick. If I remember correctly, yeah, Bitcoin's off quite a bit. Here's that neckline I've been covering on Bitcoin for quite some time. Here's the head and shoulders reversal pattern, and here's the neckline. You know, and yeah, it's just headed down for, and this will be extended. This will be a prolonged downturn in Bitcoin. Really surprised, or actually, I'm not surprised. Really impressed with Bitcoin's ability to find support back here at this 19,000, somewhere around 19,700, just a little more, a little less, around that area. And these two support lines come first from 2017. Here's the peak in 2017. And fast forward 3 years, and you can see Bitcoin spent quite a bit of time consolidating under that price level until it found energy to smash up above it, to crash through it, to crash up, as it's said sometimes, and then come over to recent history here after another 2 years, 2.5 years. And here it comes back down to that support area again, that price action, and found support. I really didn't think there would be support for it down here. I thought it was just going to do rather gradual leaking down from that point. But yeah, it decided to come up and test out the neckline again, and it's failing now. And so I think this is the next leg down, maybe something comparable, a move comparable that's comparable to this area, this downturn or this down move, this down move here, or this down move here. Usually you don't get 3 bites of the apple. Usually you don't get 2 bites of the apple. You can get 2 bites of the apple, on occasion, but usually you only get 1 bite of the apple. If you have a manner of some method of shorting Bitcoin, I don't short Bitcoin. I don't mess with it. I do have a small mining rig going that mines Ravencoin, and it's been really nice actually. One of the things about being a miner is that miners are the ones who validate transactions, and so the more volume there is on coin that's mineable, the more coins miners receive for having confirmed those transactions. And even through all this downturn, certainly the coins that I mined, let's see, I think I started mining back here when it was, I started mining when it was like about 5 cents. Yeah, right in here. Oh, in January, that's right. January of 2022. So I started mining when it was right around, I just started mining, and I started experimenting with a bunch of different coins too, and I decided to go with Ravencoin. But anyway, so yeah, and it's been doing the steady downturn thing. I think this is a prolonged downturn as well in Ravencoin. I've got a whole bunch of different lines here, just a bunch of garbage. I do this sometimes when I'm charting something new to kind of get the feel for what is the correct sort of trend line to watch. I don't even actually care because the lower the price goes on Ravencoin, the more coins I print. So it's kind of an even Steven. It's great. I'm making money. It's not a heck of a lot of money by any means, but it makes money on the way up or the way down. It's really cool. So okay. Um, let's see. So yeah, we have the inverted yield curve. The yield curve can stay inverted for a long time. And what I mean by a long time is like 12 plus months, 18 months. The yield curve can stay inverted before the broader market really takes a hard dive. What's going to happen here, today after this? I don't know. I really don't know. There's 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 a case to be made for both sides. There's a case to be made that the Fed is going to remain hawkish with the stimulus and the way inflation. I call it stimulus. It's the Inflation Reduction Act, but it's going to act like stimulus, and so that's going to keep the Fed hawkish, which is going to raise rates, which is going to tighten money supply, which the stock markets run on liquidity, and so if liquidity is drying up, the stock market dries up. The flip side of the coin is that peak inflation is in. The Fed is, even though this Inflation Reduction Act is kicking in, the Fed is going to start tightening at a slower rate. So they're going to start tightening at 0.25 basis points or 0.5 basis points, rather than at the more aggressive 0.75 or one point, a point at a time. So or I should say 100 basis points, because that's actually how it's done. I prefer to speak in percentage terms. So anyway, the case can be made that it could go bullish from here because peak inflation is in. The Fed is going to start to ease on rate hikes, and the market's going to go higher until and it's certainly possible. If you look back in history and you look at where the yield curve was inverted, and then when it finally started to normalize, where it finally started to normalize is where the stock market crashed. Again, in 2001, this is the dot-com bubble. The yield curve went deep and stayed inverted for a long time, and then once the yield curve started to normalize, then we get this big run up in the normalization of the yield curve, and then the stock market crash happened in this time period. So I can't argue with the bearish sentiment, really. The economy is, GDP. We've had 2 quarters of negative GDP, and the Fed is tightening into that. And it's bearish, and here we are at the level. I mean, the only thing that really makes me nervous about this is that a lot of people are looking at the same support and resistance line, and where the crowd goes tends to be the opposite of where Wall Street goes. But it's I have to say, I think I think this is the start of at least another leg down to test. At least to test some of this, to test support here. At least, All right. So, my sentiment is bearish. All right, everybody. Let's see. Actually, you know what? Let me see. There was something else. Oh, gold. Let's go to the risk range. Risk range plays here. Gold is, I think this looks like a distribution pattern to me. In a crash, all correlations move to 1. If we start crashing, and gold will crash right along with everything else. I know there's a bullish sentiment on gold right now. We'll see. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at Monday morning's strategy session. I am out.